Good afternoon, everyone. You're all very welcome to today's webinar on financial support with the cost of childcare. My name is Sarah Duffy and I am Head of Northern Ireland for Chartered Accountants Ireland. So today's webinar will look at the range of government support options available to working parents to help with the cost of childcare. The cost of childcare, as we all know, is a significant cost to working parents, many indeed calling it their second mortgage. So today is an opportunity to ensure that you are fully up to date on the supports available, including tax-free childcare, childcare vouchers, tax credits and universal credit. We're joined today by Chris Briggs, Senior Family Benefits Advisor with Employers for Childcare. The Family Benefits Advice Service provides free, confidential and impartial advice to parents on many aspects of welfare benefits, but with a particular focus on help with registered childcare costs. Employers for Childcare also encompasses the only social enterprise childcare voucher company in the UK. This is an organisation very close to my own heart as I previously worked there for 7 years. So Chris, it is great to see you again and you're very welcome. Also today, I am pleased to welcome Franck. Kat is Policy Advisor for Tax-Free Childcare with HMRC. She works closely with other childcare leads, both across HMRC and government. The outcome that Kat is hoping to achieve from today's session is that we can all work together to spread awareness of tax-free childcare, the scheme and its benefits. So to get today's session started, I am pleased to hand over to Chris for the first presentation.
So thank you, Zara. I'm Chris, Senior Family Benefits Advisor with Employers for Childcare. And along with Catriona, we're here to talk about the financial support to assist working parents. I hope this issue will be of personal interest to you, or it could be something that clients ask you about. And as was said, we're happy to take questions at the end. It would be fair to say that the past year has been turbulent for many people, if not all of us. Daily, the team at Employers for Childcare has spoken with working parents, employers and childcare providers, all impacted by the COVID-19 pandemic. In some ways, the vital role this year of childcare in the economy has never been more clearly demonstrated. Access to a broad range of financial support schemes has been particularly critical for employers struggling with the drop in income and for parents who have maybe been made redundant or seen their household income fall due to furlough. Against this backdrop, in recent years, there have been some seismic changes to the landscape of financial support in relation to childcare and other household benefits. From the closure of the Childcare Voucher scheme to new entrants, the introduction of tax-free childcare and the rollout of universal credit. So through this webinar, we will introduce to you and explain those changes, ensure you're familiar with the financial support options available with the cost of childcare, and perhaps more importantly, reassure you that you don't need to remember it all. Our team, and through Kat, we are here to help, advise, and to guide you. Just as a brief introduction, Employers for Childcare, as Zara said, is a charity and a social enterprise. We're based in Lisburn, but operating right across the UK. We administer a childcare voucher scheme, but also through our charity, we operate an independent family benefits advice service. And in the year 1920, the Family Benefits Advice Service identified collective financial support of almost £12.6 million for callers to the Family Benefits Advice Service line. And this is over and above any current entitlement that those callers already had. So why may this be relevant to you? Well, in Northern Ireland, childcare costs equate to the largest household outgoing for a third of families, and that's ahead of mortgage or rent payments. And yet we know that there are still a significant number of working parents in Northern Ireland who are not currently benefiting from financial support with the cost of childcare. This could be because they don't realise that they're eligible, for example, assuming household income is too high, or think that they're not eligible because of self-employment. In fact, with tax-free childcare, a household with an annual income of up to £200,000 including where a parent is self-employed, could be missing out on thousands of pounds per year in support with childcare costs. Where childcare is unaffordable, this can be a barrier to parents staying in or progressing in work, and that is also going to be an issue for employers. Because there are a range of support options available, it can be a complex landscape, which is why we're here today to give an overview, and our contact details are available to answer any questions, either this at the end of the presentation or after today. So whatever category you fall into, we're sure that there'll be some useful information for you to take away. The majority of working parents are entitled to some financial support with the cost of registered childcare. There are four main forms of support, two that are no longer available to new claimants, which is the childcare element of working tax credits and childcare vouchers. And then their replacements, which are universal credit and tax-free childcare. I'll be going into each of these in more detail along with Catriona, and also I'll be touching on the workplace nursery scheme as well. There are some common factors and a range of issues that will affect a household's eligibility towards childcare costs. Obviously, you have to be responsible for at least one child, and have parental responsibility, and you have to be using registered childcare. There isn't any help financially for unregistered childcare costs. So those are common factors, including working hours criteria and earnings criteria that will affect whatever form of support you may be entitled to. The amount that a household will actually receive is also affected by a number of other factors, such as employment status, what the household income is, the number of children, and obviously the amount of childcare costs that a household is actually paying. So firstly, I'm going to talk about the Childcare Voucher Scheme. As I mentioned earlier, the Childcare Voucher Scheme is only open to existing claimants. So it is a tax and national insurance exemption scheme which closed in October 2018, but there are many parents who are still availing of this scheme today. It's only available through employers, and if both parents work for employers who offer the scheme, then they can both avail of that, potentially doubling what their savings may be. And it's available for children up to 15 or 16 if registered disabled. The way the savings through childcare vouchers work is through a salary sacrifice scheme. So instead of a parent receiving the full amount of their salary in pay directly into their bank account, a portion of that will be taken off and paid into a childcare voucher account. The maximum amount that a parent can receive in vouchers is £243, and this would be paid by the employer into their childcare voucher account rather than as part of their normal salary to their bank account. A parent receiving this amount in this way will then save tax and national insurance of £77 per month, or a maximum of £933 per year. And then the parent uses that childcare voucher account to pay directly to their childcare provider. As the childcare vouchers are exempt from tax and national insurance, then there's also the exemption for employers' national insurance as well, which is currently at 13.8%. The childcare voucher administration company will take a fee which is a proportion of the 13.8%, but that should always result in a net saving for employers. So the greater the monetary amount of vouchers ordered by parents, then the greater the saving is for employers as well. Due to COVID, there have been some things that have come up and some changes that have been made through the Childcare Voucher Scheme. But the thing that has happened most with vouchers is that many parents have not needed as much childcare as what they would usually have had. So many have temporarily paused or reduced their payments into the Childcare Voucher Scheme because childcare providers were closed, or maybe they themselves as parents have been on furlough. If childcare vouchers are paused, then the eligibility for that scheme could be lost unless the parent makes at least one payment into their childcare voucher account in every 52 weeks. So even if a parent is not using childcare at the moment, the childcare vouchers can still be saved or banked into their childcare voucher accounts for future use. Also is the issue of backdating of childcare vouchers. Backdating can ensure that parents and employers get the most benefit from the scheme, and this is perhaps more relevant or has more of an impact closer to the end of the tax year than now when we're just into the second month of the tax year. But this is something that is permitted by HMRC, but is at the employer's discretion, and is where the parent retrospectively claims the full entitlement for the tax year if, for example, they have been sacrificing less than their full allowance per month. So if, for example, parents have reduced their salary sacrifice because of being on furlough or any sort of leave that have meant they have not needed the full amount of their childcare vouchers. So in the example given at the bottom of the slide, instead of saving $768 across the year on their £200 per month sacrifice, by backdating and increasing the parent's full salary sacrifice, they would save an extra £165 over the last 2 months of the tax year, taking the total savings back up to the maximum £933 per year. Also, with childcare vouchers, there has been a change due to change in the way it interacts with the national living and national minimum wage. So prior to April 2020, employees who were close or at the national living or minimum wage were unable to use the childcare voucher scheme. And that is because by salary sacrificing a portion of their income, their hourly pay, so the remainder of their hourly pay, would have dropped below the level of the national living or national minimum wage. Examples where employers could have got caught out by this would be if, as in the previous slide, an employee decided to backdate their childcare vouchers, so it increased the amount of vouchers they were taking, meaning their hourly rate for the remainder of their pay dropped below that threshold. Or in an April of the year where the rise in the national living or minimum wage, or where an employee had reduced their working hours, and the employee or employer had not reviewed their salary sacrifice amount. In those cases, it could have been that the employee's remaining salary had dropped below the hourly rate had dropped below the living wage or the national minimum wage, and that caused the employer to perhaps be fined because of that. So from April 2020, employers will no longer be fined if a salary sacrifice brings their hourly rate below this level, as long as the employees opted into the scheme voluntarily and the employee receives the full and correct benefit. So as long as the employee is receiving the full amount of their childcare vouchers plus the remainder of their salary, and those combined amounts are above the national living wage, then there's no reason that an employee will not be able to join the childcare voucher scheme, or remain in the childcare voucher scheme, I should say. So just to mention about losing eligibility to childcare vouchers. As I said, the scheme did close to new applicants in 2018. However, for the users who are currently in the childcare voucher scheme, they would be no longer eligible to the scheme if they A, start to use tax-free childcare. You cannot go back onto the childcare voucher scheme, even if it is more beneficial for you in the future. And also, if you're to move to a new employer, you cannot join that new employer's childcare voucher scheme unless it is a situation where the employer has been bought over and you're being two-paid across. Or, as was previously said, if you don't make a salary sacrifice into your account for 52 weeks or more. So in any of those three cases, you would not be eligible to remain in the Childcare Voucher scheme. I'm delighted now to pass you over to Catriona Franck from HMRC, who has been of invaluable assistance to our team, and she will explain the Tax-Free Childcare scheme to you before passing back to me when I will take you through the other forms of support.
Fantastic, thanks very much, Chris. So yeah, I'm Cat Franck from HMRC. My colleague Ros Hans is on the line as well. So I'm just going to quickly talk you through my policy area, Tax-Free Childcare, one of the government's childcare offers, the rest of which Chris is successfully handling himself. Chris, do you mind moving on to the next slide? Thank you very much. So for those of you that don't know, and appreciate some of you will, but what Tax-Free Childcare is essentially up on this board right now. So it's support for working parents earning between £142 a week and up to 100 grand a year each in adjusted net income. So what that means is that if one parent isn't working, for example, the family won't be eligible for tax-free childcare. But it does also mean that for example, a family with two working parents, each expecting to earn, say, 90 grand a year, so 180 grand between them, would be eligible for tax-free childcare, as long as they meet the other eligibility requirements. So that's something that surprises people because it's quite a high number. So the other eligibility requirements are they can't be receiving tax credits, they can't be receiving universal credit or childcare vouchers. And it's for children aged 0 to 11 or 0 to 16, up to 17 if they're disabled. So they stop being eligible on the 1st of September after their 11th birthday or when they turn 17 if disabled. And essentially the system's this: for every £8 a parent pays into the online childcare account, the government will add an extra £2 up to £200,000 per child per year. Unless the child is disabled, in which case it's up to £4,000 per child per year. So really it's a great offer. If you're eligible and currently spending £100,000 on childcare a year, but not using tax-free childcare, by signing up for it, you could be saving £2,000, which is significant. Could we possibly move on to the next slide, please, Chris? Thank you very much. So yeah, that's the basics. And the regular questions we get about TFC in Northern Ireland are up on this screen. I'll dig into them a little. So easy one first. Parents in Northern Ireland are eligible for tax-free childcare if they meet the requirements, same as a parent in Wales or England would be, as it's a UK-wide scheme. Where things start to get a bit trickier is where it comes to the sort of interconnectivities of lives across the border. So a common one that we get is, am I eligible if I live and pay my tax in Northern Ireland but use a childcare provider in the Republic of Ireland? And now the quick answer to that is usually yes, as long as the Irish government have approved that provider. But for various reasons, we can't check that the provider in the Republic of Ireland is an approved provider ourselves. So we need the parent to complete a slightly more detailed version of the application, which can be done by phoning our helpline, which is up on the screen now. The numbers in the slides and can easily be found on gov.uk as well, if you wanted to consult there. And it's a similar answer for the third question on the screen. Will I be eligible if I live in Northern Ireland but work in the Republic of Ireland? If you're eligible, you need to complete a self-assessment tax return to register your earnings with HMRC, so we can assess your eligibility through our systems. So those are the sort of common questions on Northern Ireland. Chris, would you mind moving on to the next slide? Thank you very much. So we also gave some thought to sort of what might specifically be helpful for chartered accountants to know when advising clients who might benefit from TFC. And just to be really clear on the top bit on these slides, we're not advising anything here. We're just flagging some considerations taxpayers might want to take into account around tax-free childcare when structuring their affairs. But the first bit there is for small business owners. So to meet our minimum income test, that's the £142 a week figure, the owner or directors of small businesses will need to be paying themselves enough in wages to make that, and they'll need to be doing it no less frequently than quarterly. So that's every 3 months. So for example, if they were paying themselves quarterly, they would need to pay themselves £1,846 or more over each quarter to remain eligible. So the next bit's on dividends. Now, they don't count for our minimum income test as they're not income from work. But our maximum income test, the £100,000 a year figure, is really more like a means test. So dividends do count for that. So that might be something to take into account when advising on tax structures. Chris, would you mind moving on to the next slide, please? Thank you. So also something I mentioned right when I was describing what TFC is adjusted net income. So if a parent's adjusted net income, or ANI, was just over £100,000, they could choose to make extra contributions to their pension to reduce that down to remain eligible. We'd have no objection to that, but we're not advising anything. It's totally up to the parent, and it depends what's best for them. Just something to take into account. We also recognise that sort of certain types of income profiles, particularly like farming, don't allow for paying themselves every 3 months or less. So for self-employed parents only, TFC allows them to meet the minimum income test by reference their income across the current tax year. But if they're running their business via a limited company, so they're not self-employed, they're paying themselves through a company, the rule I explained earlier about the sort of earner directors of small companies needing to pay themselves every quarter or less, that comes back into play. So again, just something to think about. Next slide, please, Chris. Yeah, so Chris just mentioned that the scheme was designed to replace Childcare Vouchers as it closed to new entrants in October 2018. But lots of people still haven't signed up to benefit from it. So we believe that it's potential that your clients or employees even, or yourselves, might be missing out. So we have comms products available to circulate, which can be found at that link. And next slide, please, Chris. And we also have social media assets that look like these that you may want to share. That can be found at the same link. So yeah, I think that's all from me. Thanks very much for your time, and yeah, happy to take any questions on Tax-Free Childcare at the end. Thanks, Chris, back to you.
Thank you very much, Catriona. I'm just going to go through a couple of case studies just where parents may be better off on one or the other in childcare vouchers versus tax-free childcare. So in this slide, Amanda and Bill are paying £390 per month for their one child. Both parents are working, so they're available, they're able to get childcare vouchers and to meet tax-free childcare eligibility criteria as well. They can split their childcare bill in half, so each are sacrificing £195, as it says there. So each are able to make a tax and national insurance saving of £62 a month, jointly saving £124 a month in tax and national insurance through the childcare voucher scheme. By comparison to that, through tax-free childcare, the government pays them 20% of their childcare bill. So each month the government would top up their tax-free childcare account by £78. So clearly making saving of £124 through vouchers versus the £78 through tax-free childcare. In this case, the couple are better off continuing to use the childcare voucher scheme by £46 per month. This case study is slightly different. On one hand, we have a higher rate taxpayer, but as well as that, we have childcare costs that fluctuate across the year, which can often be the case for children in different years and attending full-time school during the year. So in this case, Taryn and Amina have two girls. Both go to an after-school club, but only for 38 weeks of the year, so only during term time. So they're paying £55 a week for Hema and £46 for Gita across the school year. But then they also attend a holiday club during the summer holidays. So for 7 weeks of the year, their childcare costs are much higher, £130 a week for one and £78 per week for the other. So across the whole year, their childcare costs are £5,301 annually. Taryn is a higher rate taxpayer, so received childcare vouchers through salary sacrifice, but Amina is self-employed and therefore is unable, because of not being eligible, to receive the childcare vouchers, but they do meet the criteria for tax-free. As a higher rate taxpayer, Taryn's maximum salary sacrifice that he's allowed to make is £124 per month. So across the year, he receives £1,400 in childcare vouchers, £1,484 in childcare vouchers, thus saving £623 in tax and national insurance. As Amina is self-employed, not eligible for vouchers, then that is the maximum that they can save through the childcare voucher scheme. Through tax-free childcare, the couple save 20% of their childcare costs, meaning that they receive a top-up of £1,060 per year. So this family will be financially better off using the childcare voucher scheme. And indeed, even if Taryn was a basic rate taxpayer, saving £933 a year, they would still be better off on tax-free childcare.
The recess is in for you. And the recess for you.
So moving on now to tax credits. So tax credit, as I mentioned earlier, are one of the other benefits that are only for existing claimants. Tax credits is a means tested benefit, so it's dependent both on household income and your household circumstances as well. It's normally based on previous year's income unless there is a significant change in circumstances. So in this year, obviously many people have seen a reduction in their income due to furlough or due to losing a job. But also we would have many people who have changes in income throughout the year because of being on maternity leave and perhaps going down to statutory maternity pay. So in those circumstances, rather than entitlement being based on a previous year's income, their entitlement would be based on an estimate of what the current year income would be. But also, depending on what the change of circumstances are for existing claimants, many claimants may be required to move across to universal credit instead. The childcare element of working tax credits is payable at 70% of registered childcare costs, and that's up to the maximums as shown on screen. But tax credits is a means tested benefit. So while 70% is used to calculate the entitlement, the actual amount that a parent would receive will be dependent on household income and circumstances. But to use an example, a household with 2 children paying the maximum childcare costs as they are there could have earnings of up to £59,000 and still have some entitlement to tax credits. The way the childcare element works within tax credits is that an existing claimant to tax credits informs HMRC of what their estimated childcare costs are. HMRC then adds that amount to their current tax credit award, and the claimant receives the payment, but that payment is directly into their own personal bank account. So it's up to the claimant to pay the childcare provider in a timely manner. And because we're working on estimates of what childcare costs are, HMRC does verify directly with the childcare provider what the childcare costs are relating to that claim. And they would do that periodically with all claims of childcare through working tax credits. Moving on now to the replacement for tax credits, which is universal credit. Tax credits isn't the only benefit that's been replaced by universal credit. Many other ones there, such as income support, housing benefit, employment support allowance, etc., have all been replaced by universal credit. And many people who are in have a change of circumstance have seen that they have had to move across to universal credit, either to remain entitled or to receive a higher amount of entitlement that universal credit might give them. Universal credit is for all working age people, so over 18 and under state pension age. Because it was replacing so many other benefits, then it has lots of different elements included in it, whether that's for housing or for disabilities or for the childcare element that we're talking about here. Rather than a claimant reporting income directly to Universal Credit, Universal Credit actually checks what a claimant's income is directly from HMRC through the real-time information reports that all employers pass on to them on a monthly basis. And payments in Northern Ireland of Universal Credit are actually made twice a month. Universal Credit, it's a digital service, so everything is done online, whether that's a claimant reporting information to Universal Credit or receiving information from Universal Credit. Everything is done through what they call an online journal. It is through this online journal that a claimant reports how much they are paying in their childcare costs, and a claimant can receive up to 85% of their relevant childcare costs through Universal Credit. And that's up to the same maximums as there were through tax credits as well. So while 85% is used to calculate the entitlement, it is a means tested benefit again, so it's dependent on household income and circumstances. While that 85% is more than what you would have got through tax credits, generally speaking, Universal Credit tends to be a less generous benefit than what the old system was. So to use the same example of a household with 2 children and maximum childcare costs, they could have earnings of up to about £57,000 and still have some entitlement to Universal Credit, rather than the £59,000 that you'd still got some entitlement through tax credits. The way the childcare element works through Universal Credit is also very different to all the other forms of help. With all the other forms of help, you effectively receive the help with your childcare costs before you have to pay the bill. With Universal Credit, it is a reimbursement system. So a parent has to pay the childcare provider for all the childcare costs that are billed within a monthly assessment period. And then the parent submits their invoices and their proof of payment to Universal Credit via their online journal. The parent then has to wait until the end of the monthly assessment period, whenever they will then receive the reimbursement of the up to 85% of the cost of childcare that has actually been used within that assessment period. And this opposite way of doing it compared to the other types of benefits that you can get with childcare can cause problems for parents who are moving from one form of help into Universal Credit. Now, just to talk very briefly about the workplace nursery scheme as well. So workplace nursery scheme was introduced to encourage employers to provide nursery places for their employees to use. The costs of a workplace nursery can be paid through a salary sacrifice scheme. And if that is the case, then the cost for the employee of a place at a workplace nursery is completely exempt from any tax and national insurance. And obviously, as being exempt from tax and national insurance, it's also exempt from employers' national insurance as well. To be exempt, a workplace nursery, obviously it has to be registered and approved, so to have all those appropriate registrations and approvals, and be available to all your employees. So it can't just be available for employees at a certain level. It has to be open to all, and provide childcare for the employees' children, or the children that the employees have parental responsibility for. Depending on what registration or approval the workplace nursery would have, that would dictate the maximum age that children are able to attend that nursery. The nursery doesn't have to be physically at the workplace. It can be at a different site. But the key thing is that the employer manages and finances those premises that the workplace nursery is in. And we have more information on workplace nurseries on our website at employersforchildcare.org. So obviously, between myself and Catriona, we have given a lot of information about the various forms of support that there are towards registered childcare. So at the Family Benefits Advice Service, we cover everything that's on your screen. So we don't just focus on childcare issues, we cover the whole range of benefits, whether that's in-work benefits or out-of-work benefits. And also the effect of maybe changes in circumstances and what that might have in your benefit entitlement. So we have a lot of queries because of COVID-19 in particular, affecting employment. We have a lot of different queries coming up this year than before regarding the effect of furlough schemes, the effect of other job support schemes on the self-employed, and increased or decreased working hours. So we can cover everything, not just focused on childcare costs specifically. But we're also here to support yourself, your clients, your staff. And in doing that, you can obviously share information about the Family Benefits Advice Service, and we can facilitate parent information sessions for your employees or for your clients as well. We can take referrals from HR teams for your staff, but there's also access to our free phone helpline, online fact sheets, reports, and information videos, and that's all available on our website at employersforchildcare.org. But as well as that, we have our own free phone helpline and Catriona's email address as well. And information is also available regarding tax-free childcare through the Childcare Choices website as well. So whether it's ourselves at Employers for Childcare and the Family Benefits Advice Service, or it's HMRC specifically about their services, our details are there for you to contact us. So that's the end of the presentation, and I can now happy to take any questions, as will Catriona as well, that you might have.
Thanks very much, Chris and Catriona, for your presentation. There's certainly a lot of information in that, and the questions are coming in. First question, Kat, I think probably one for you. I know you did touch on this. Do both parents need to be working in the UK? What about one earning in the UK and one earning in the Republic of Ireland?
Yeah, so I would direct you towards the number that I put up there. In most cases, yes, but you need to check. So yeah, as I said, can't comment on individual cases, but I would direct you to Employers for Childcare, who would be able to help with that specific case and advise, and also just the application process will tell you if you're eligible or not. But I would advise to go to Employers for Childcare first, especially if you're currently on Childcare Vouchers.
Okay, thank you. Another then TFC one, does tax-free childcare work if one parent works and the other one doesn't and is on universal credit?
No, you would not be eligible in that case.
Okay. Yep. And can you claim tax-free childcare if you're a lone parent, i.e. there's only one parent or responsible person named on the birth certificate?
Yeah, absolutely. If you're a single parent, you are eligible for tax-free childcare as long as you meet all the other eligibility requirements. Yeah.
Okay, and it's just some coming into the chat function as well. Can tax-free childcare be backdated upon commencement of the scheme?
No, because you're using your childcare account to pay your childcare bill. So no.
Okay. And how is tax-free childcare administered? Does it work through your employer? Do you manage it yourself from your net earnings or via the registered provider?
Yeah, so that's how it's different to childcare vouchers, because childcare vouchers are like an employer-based scheme. Tax-free childcare, to replace it somewhat deliberately, is actually you manage it yourself. So you create your own childcare account and you pay through your childcare account to your childcare provider. And when you put £8 into that account, the government puts in £2 extra. So it's entirely managed by the parent, in a way that childcare vouchers were a sort of collaboration between parent and employer and childcare voucher system. So this is a scheme that pretty much anyone that meets the eligibility criteria is eligible for, whereas childcare vouchers, the employer had to be signed up to the scheme for it to be for them to be able to use it. So a lot of parents will be eligible for it in a way that they might not have been for vouchers.
Great. Okay, thank you. Chris, one for you, I think. Is anyone really better off on tax-free childcare than childcare vouchers?
Yes, many people are. As a rough estimate, whenever a parent is paying, if only one parent is able to get into childcare vouchers, then if they're sacrificing the maximum amount of 243, their savings would be around £933 per year, as I've said. If childcare costs are around £90 or more, then tax-free childcare becomes the better option for them. So that's obviously you should contact ourselves and we'll do a full check for you. But as a rough estimate, once you hit £90 and there's just one in vouchers, then tax-free childcare can become the better option for you. It depends on other household circumstances as well. But yes, there's many people are much better off on vouchers, particularly higher earners, than what they would be through much better on tax-free childcare, apologies, than what they would have been on the childcare voucher scheme.
Thank you.
Yeah, I'd just like to come in on that as well, Zara, if that's okay. I mean, absolutely exactly what Chris said. And there were the two examples that we gave on the slides as well. And obviously I would direct you to Employers for Childcare to check specific cases. There's also the childcare calculator online. So it's gov.uk/childcare calculator that you can put your own specific circumstances into. It takes a little while because there's a lot of questions to answer. To make sure that we're getting the numbers right, essentially. But that should give you a pretty good projection of what you would save on tax-free childcare versus what you'd save on childcare vouchers. So you can tell if you're better off that way.
That's great. And have we a link to the childcare calculator?
I can put it in the chat now.
Yeah, great. Thank you. Can you claim tax-free childcare if you're a lone parent? Sorry, we've done that one. Do employers for childcare advise on maternity allowance for self-employed?
Yes, we can.
Okay, great.
Yep.
And your details certainly are on the end of the slide, so
yep.
You can reach out directly with that one. If the parents are unmarried or not in a civil partnership, do both still have to work to be eligible for tax-free childcare?
Yes, both parents have to be working.
Okay.
If I could just jump in there, generally, if you're living together as a couple, you're treated as a couple. So you know, for all benefits, it's kind of the household is looked at rather than what the legal standing between them is. So, yeah.
Okay, perfect. And how often does the government top up the 20% for tax-free childcare?
As soon as you put it into the account. So it's not like a monthly thing. It's it's immediate.
Okay, that's great. Still a couple more here. Does tax-free childcare affect your taxes?
No. In no way does it affect your taxes.
Okay, that's another simple one.
That's a nice and easy one. We get that one a lot because, of course, tax is in the name and we are HMRC. So that would make sense. But actually, what it really is basically a government childcare subsidy. So that's the way to think of it. It doesn't affect your taxes in any way.
Okay. Can you change your mind and withdraw money from your tax-free childcare account, or can it get stuck in there?
No, so that's also one we get quite a lot. So no, it can't get stuck in there. You can't, somewhat understandably, you can't put in £8, get the extra £2 and then take £10 out, because that would be bad. But you absolutely can withdraw the £8 you put in originally. You'll just lose the top up. So it doesn't get stuck anywhere. Yeah.
Okay, thank you. So another one, is the extra 20% off what you pay into the account, or 20% off the total cost of childcare? So if you pay in £8, will you get an extra £160 or an extra £2?
Yeah, it's confusing, the 20%. I totally appreciate that maths. But essentially you need to think of it as being £8 and £2. So it's the 20% extra is on top of the full amount that you're paying off your bill. So you need to think of it as if you get a bill from your childcare provider, it's £200 for example, the 20% that we would take the money like off you paying is off that £200. So you would get £40 off of that, for example. So yeah, it's an extra £2 on top of every £8 you pay. So it's not £1.60 rather than yeah, £2.
Yeah. Okay.
Yeah.
Thank you for clarifying that. One for you, Chris. If an employer doesn't currently operate a childcare voucher scheme, can they start one up?
They can start one up, but the situation is that there can be no new people joining the scheme. So the only way or the only reason why an employer would be starting one up would be if they are two paying employees across from a different business that they've bought over, and they're offering the scheme then to those existing users of the childcare voucher scheme. But a business that's never offered childcare vouchers can't just start a childcare voucher scheme, because nobody's allowed to join it who are not existing claimants to the scheme.
Okay. And through childcare vouchers, employers were able to make a saving as well as the employee. Is there a similar provision within any of the other schemes, like tax-free childcare?
No, there's not.
Okay.
Short answer.
I suppose the employers aren't having to do anything on the tax-free childcare then, as opposed to the childcare vouchers where they were involved with it.
Exactly.
You mentioned about personalised advice, Chris. So for the people on the call, can they or one of their clients call for personalised advice? And do you do sessions for small groups or companies?
Yes, and yes to both questions. Yeah. We can do information sessions depending on what the circumstances are or what the group is. But you know, while that gives general information, like today, we do, whenever people call us, then we could do one-to-one advice, and any contact with us, it's completely confidential. So we're not linked to any government organization or anything like that. So the information given or received doesn't get passed on to any other government agency or organization.
Super. And the last one question in at the moment, can I be a higher rate taxpayer and still use tax-free childcare?
Yeah, that's one we get a lot. Absolutely. As long as you meet all the eligibility criteria. So especially because our maximum income threshold is £100,000 a year, a lot of people will be within that bracket higher rate taxpayers. And it does surprise people that they can be high rate taxpayers and eligible for TFC. And that's something that we'd really like to get out there. So yeah, you absolutely can be, as long as you meet all of the other eligibility criteria. You won't, however, get 40%, for example, extra. You'll still only get the 20% extra, the £2, same amount, but you can be a higher rate taxpayer and still eligible for tax-free childcare, absolutely. And in fact, commonly.
Great. Okay. Well, that is all the questions that we have received. So it just remains for me to thank both Chris and Kat today for your time and preparation for the session. There was certainly lots of information covered. So I hope everybody on the call found it useful today. And remember that you can follow up directly with the Family Benefits Advice Service and with Catriona's details that are in the slides. So I hope everybody has a lovely afternoon, and thank you for joining us today.
Brilliant. Thanks very much, everyone. Thanks, Zara, for hosting.